Dear learners, it is said mutual funds are subject to market risk. I, Nilakshi Arora, Assistant Professor, Department of Commerce, the Bhopal School of Social Sciences, is here to talk about mutual funds today. So let us first understand the meaning of the word mutual funds. Children, mutual fund is a fund in which people invest in a mutual fund company, and that mutual fund company is going to invest in different categories of shares through their different mutual fund schemes. When we invest in share market, we directly buy the shares of a company. But when we invest in mutual fund scheme, we are not directly buying the shares of any company, but we are going to buy the units of a mutual fund company, and that mutual fund company is going to invest in the share market for us. So as you can see, mutual fund is a type of a financial vehicle which is made up of a pool of money from many investors to invest in securities like stock, bonds, money market instruments and other assets. So simply, mutual fund is a type of investment in which instead of we directly investing in the share market, the mutual fund is going to invest in the share market on behalf of us. Mutual funds are operated by the professional managers who also allocate funds to assets, and they attempt to produce capital gains or income from the fund investors. So whenever the mutual fund investor is going to give his money to the mutual fund company, that company is going to invest in the share market. So as when we invest normally in the share market, we get the capital appreciation and the dividend. In similar manner, in mutual fund also, we are going to get the capital appreciation and the mutual fund. So it simply happens that the mutual fund company is going to have the funds, and that funds will be invested in the diversified portfolio. By diversification, what is going to happen? So by diversification here, the risk will be reduced and the returns will be increased. So this is one of the most important benefit of the mutual funds, that by investing in the mutual funds, your risk is minimized or it is reduced and the return can be increased over a period of time. Now let us understand the working of a mutual fund. How does actually the mutual fund works? So first of all, what is going to happen? There is an investor who is going to invest his money in the mutual fund company. Mutual fund companies can be called as fund house, it can be called as asset management company, or it can simply be called as mutual fund company. This company actually appoints one person who is called as fund manager. This fund manager is going to invest your money in different kinds of securities which are available in the market. It can be shares, it can be stocks, it can be gold bonds, it can be any other money market instrument. And from that you are going to get the returns. These returns will be passed back to the investors, and a part of this will go to the fund house. So it's very simple calculation that if, say for example, rupees 100 is earned from the share market, a part of rupees 100 goes to the investor and a part is retained by the fund house or the asset management company or the mutual fund company for meeting out its expenses. Now here the question is, when we invest in the mutual fund company or when we invest in the fund house, what exactly does it happen and what do we get? So children, when we invest in the fund house, the mutual fund company or the fund house issues us the units which are based on the NAV calculation, which we are going to study in the next slide. So now let's understand the meaning of word NAV and units. As I told you, NAV means net asset value. So what exactly happens is, when you give your fund to the fund house is going to return you the units, or the fund house will allot you units. Units are always allotted based on the NAV of that day. So based on the net asset value, the fund house is going to allot you the units. In simple words, what happens is when we invest amount in the share market, we get the number of shares from the market. Here, instead of shares, we get the units from the market. So what is the NAV? How does company calculates NAV? So the formula is assets of the mutual fund minus liabilities of the mutual fund company, or simply net assets divided by the total number of existing mutual fund units. This simple formula gives us NAV. It is simply like we calculate the value of share of a company. Here we calculate NAV of the mutual fund. Once you have calculated the NAV of the mutual fund, you can find out how many units will be allotted to you, which is based on a very simple formula, whatever amount you invest. So if you are investing 10,000 and the NAV per unit is rupees 10, so 10,000 divided by 10, you are going to get the number of units which are allotted to you by the mutual fund company. So now let us understand NAV and units by solving one question. So say for example, the market value or the net assets of a mutual fund scheme is rupees 5 lakh. And mutual fund presently has 50,000 units issued in the market. So what is the formula? We know the formula of NAV is equal to net assets divided by number of units. So net assets given in the question is 5 lakh. So we are going to write here rupees 5 lakh divided by number of units which is given as 50,000. So we will get the net asset value per unit, which will be rupees 10. So that means if today you want to buy units of this mutual fund scheme, you have to invest rupees 10 per unit. So let's say the investor has 5,000 rupees with him. So what he is going to do? He will invest 5,000 rupees in buying the units. So how we can calculate number of units which are allotted to him? So we are going to do the amount which is invested by him divided by NAV of 1 unit. So he is investing 5,000 and the NAV is rupees 10. So rupees 5,000 divided by 10. So the company here is going to allot him 500 units of the said scheme. Further, say for example, you want to sell the mutual fund and tomorrow the price is more than 10. That means the NAV is more than 10. So as an investor, you are going to have the gain. And if the NAV is less than 10, you are going to have the loss. So after studying all the concepts of the mutual fund and basics of the mutual fund, let us discuss few of the benefits of investing in mutual fund. The first one is it is safe and transparent. All the mutual fund schemes which are there in the market are subject to the conditions and rules which are laid down by the SEBI, that is Securities Exchange Board of India. So if a mutual fund company wants to open the scheme, it has to follow the rules and guidelines of the SEBI. So thus it is safe and it is also transparent. Next is, since your risk and return is being studied by a portfolio manager, at times you can get high returns. So you can expect a high returns from the mutual funds. Next benefit is liquidity. So like you can sell your shares through a stock exchange. In similar manner, you can also sell your mutual fund through the mutual fund company's account or through a demat account. The next benefit is diversification. So since I told you that portfolio manager is going to invest in different categories of shares and bonds, your risk is diversified. The next benefit is it is economical. You can even invest in a mutual fund with 500 rupees. So it is said that it is economical and it is easy to invest in the mutual fund. The next benefit is it is convenient. So what you can do is you can directly buy mutual fund through your demat account, or you can even buy mutual fund through that company's website. Next is it is expertise. The fund manager is expert in this field, so your funds are generally safe. The last benefit is that the fund manager is going to manage the inflations also, and he's going to invest in the funds which are safe and which will give you return in the long term. So these are the benefits of investing in the mutual fund. So I hope you have understood the basics of a mutual fund and how does a mutual fund work. In the upcoming module, we'll be discussing about the different types of mutual fund schemes which are available in the market. I hope you enjoyed this video. Thank you.